Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Miami at Exchange, an ETF experience where we're meeting with the top thought leaders and innovators in the ETF space. Joining us for the segment, we have Simeon Hyman, who's the head of investment strategy group over at ProShares, to discuss two very topical topics in the market right now. Of course, interest rates, and everybody wants to know about momentum strategies as well. Simeon, it's great to see you in
Thanks
person
for having
again.
me. Appreciate
It's been quite some time since we've been in person together, and I want to talk about interest rates first because, of course, I mean, we saw the inflation data this morning. We know interest rates continue to rise. ProShares has EQRR, an ETF related to that. What is that fund all about?
ProShares Equities for Rising Rates, and it does exactly what it is intended to do, and as the name suggests, and it leans into that rising rate environment and identifies sectors and the stocks within them that have outperformed when interest rates have risen.
And what does that mean for investors?
So what it means for investors is that there's an opportunity to go on offense. Many people see rising rates and they say, I've got to go into some defensive stance. Maybe I need to go into really low multiple stocks with no growth. But that's not likely to salvation. In a rising rate environment, you need the stocks that will do well. And by zeroing in on them, and this is a heavy zeroing in, the bulk of this portfolio is in just those 5 sectors that have the highest correlations, things like financial, energy, materials, that will work well with either rising prices, wider net interest margins, and perform really well when those interest rates are rising.
So how does EQRR strategy work?
It identifies the 5 highest correlated sectors with rising interest rates, and then within them 10 stocks within them that are most correlated for a 50 stock portfolio. And we do that every quarter. It follows the Nasdaq US Large Cap Equity for Rising Rate Index. And the performance has been exactly what it's supposed to do. Since the low of interest rates in the summer of 2020, almost double the return of the S&P 500.
Let's dive into the sectors more. Which ones perform the best in rising rate environments?
So if you look at sort of the big 3 right now, you're looking at energy, which of course we know what energy has done, but it's not the only leg. Financials, which again, as we get even normalization of the long end of the curve, and we've seen that too, financials tend to benefit, and then things like materials, where of course you have the pricing power from that commodity fuel piece of inflation.
Where does EQRR fit in an investor portfolio?
It fits very well in your large cap sleeve, and it can take even the large cap growth slice because you got a little bit of extra octane here, but very well behaved.
I want to switch and go into momentum-based strategies as everyone's thinking about sector rotation and really what's the next sector to take off here. Tell us about the ProShares ETF QQQA.
QQQA is our Nasdaq 100 Dorsey Wright Momentum ETF. And it's the only ETF that applies that momentum factor to the Nasdaq 100, that bellwether of growth. And momentum is a time-tested strategy, and here we're partnering with Dorsey Wright, perhaps one of the most well-known practitioners of momentum, with their relative strength version of momentum, to apply that to the Nasdaq 100 and get the outperformance that you can from that factor.
When I saw momentum-based strategies, Dorsey Wright was the first thing that came to my head as well. What does that mean for investors?
So here it's very interesting. This strategy identifies the top 21 stocks ranked by relative strength every quarter, and then it equally weights them. So there's a couple of key things here. First, remember, we're fishing only in the Nasdaq 100. So that means it's well behaved. You always know it's going to be growth. One of the challenges with momentum strategies is they can change their stripes dramatically if they fish in a very broad pond. Here you're only fishing in the Nasdaq 100. Also, the equal weight is critical. Everybody knows how top heavy the Nasdaq is today. The equal weighting really positions this strategy very distinctly from that top heaviness of the Nasdaq 100 off the shelf.
So how's this all put together?
Every quarter we take those 21 stocks, we equally weight them, and that's how the portfolio is put together. It's an index-based strategy, and it fits very well in that large cap growth piece of your portfolio, but also of course as a momentum satellite.
And then where would it fit in an investor portfolio?
Right in that momentum satellite or in that growth sleeve.
And of course, where can investors go for more information?
ProShares.com.
All right, Simeon, great to see you in Miami. No more remote hits.
Nope, we're live.
Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.